Petroleum Nasional Berhad or Petronas was incorporated on August 17, 1974. It is wholly owned by the Malaysian government and is vested with the entire ownership and control of the petroleum resources in Malaysia through the Petroleum Development Act 1974. Regarded as one of the new seven sisters in the world, the Petronas Group has over 30 years of solid experience in oil, gas and petrochemical operations, with presence in more than 30 countries. Under the mandate entrusted by the government, Petronas is responsible in managing and steering the overall exploration and production activities in Malaysia. This is carried out through its Petroleum Management Unit, also known as PMU, under the Exploration and Production or E&P business. In addition, PMU's role also encompasses the optimization of Malaysia E&P assets and the management of all E&P companies operating in the country.
PMU also manages world-scale projects involving the construction of pipelines, jacket, topside, living quarters, compressor module encompassing all phases of project planning and implementation from the identification, definition and execution stages.
In Malaysia, activities of upstream exploration, development and production of crude oil and natural gas are undertaken and managed through production sharing contracts with a number of international oil and gas companies, as well as with its subsidiary Petronas Carigali Sendirian Berhad. To date, Petronas has signed more than 70 PSCs with international petroleum companies.
In principle, Petronas and the production sharing contractors have a common objective to optimize the development of the petroleum resources in the contract areas. As a manager and a custodian of national resources and with the interests of the nation in mind, Petronas' objective goes beyond purely commercial consideration. Petronas' role is to ensure that any given development plan delivers an optimal value to the production sharing contractors, the nations and the people of this country.
Hello, this now is a brief introduction of the Petronas. So now I want to explain about the analysis of the company since 2011 and 2012. The first one is the current ratio. As you can see in 2011, the current ratio is 2.7 times. Compared by the 2012, is 2.334. It's because of the current assets in 2011 is higher than the current assets in 2012. And then the current liabilities is almost the same number. The next one is about the quick ratio. So in 2011, it shows that the quick ratio is 2.5 times. It means that the company has 2.5 times of its most liquid assets to meet the requirements of its current liabilities. And in 2012, it shows that the quick ratio is 2.16, which means the company has 2.16 times of its most liquid assets to meet the requirement of its current liabilities. The next is about inventory turnover. In 2011, it shows the inventory turnover is 11.8 days, and in 2012, it shows is 13.81 days, which means in 2012 it shows higher inventory stock turnover. So which means the company is able sales of its inventory more than the 2011. The next is about total asset turnover. In 2011, the total asset turnover shows that 0.5, and in 2012 we show 0.59. So which means in 2012 it shows higher than the previous year. So which means for every 1 ringgit worth of asset utilized of the company can generate more of the sales. The next one is debt to assets or debt ratio. In 2011, it shows the debt to assets is 30%, and in 2012 it shows 31%, which is increasing 1%, which means that 31% of the total assets of the company were being financed by debts. The next one is a gross profit margin. In 2011, it shows the GPM is 40%, and in 2012, it reduced into 36.9%, which means for every $1 sales, Petronas is able to generate around $0.67 of gross profit. The next one is operating profit margin. OPM in 2011 shows is 40%. However, in 2012, it shows only 31.1%, which is lower. So for every $1 sales of Petronas, is able to generate more of operating profit. The next one is net profit margin. In 2011, it shows 20%. In 2012, it shows lower, which is 16.9%. So for every $1 sales, Petronas is able to generate more of net profit. The next one is earning per share. In 2011, the EPS shows is 0.12, and in 2012 it shows 0.112, which is reducing. So for every $1 of common stock equity, Petronas is able to earn more in 2000. The next one is the return of total asset. The ROA in 2011 shows 10%, and in 2012 it really decreasing rapidly until 0.09%. So which means for every $1 total asset invested, Petronas is able less for the common stockholders. So for the conclusion, according to the data given, I do recommend to invest 1 million ringgit with Petronas. Viewed from the ratio of Petronas during the last 2 years, I noticed that even though the current ratio was decreased in terms of current assets and increase in current liabilities, they still good in other aspects. Financial position of the company becomes stronger because the company's money is not reinvested but kept in the bank. However, according to the average collection period within 2011 and 2012 is increased from 62 days into 53 days. Rather than that, return on assets was increased from 0.09 to 0.1. Because of there are increase in net profit, so the company is able to generate 0.111 cents of returns to the shareholders. They are increase in net profit of Petronas because their role are really important in this life. They provide more than just a fuel. They also do some educational and other business. View of market price itself. Market price from 2011 until 2012 was increased, and if we invest in Petronas, it can generate more money to us because Petronas market price always increase every month. Public always follow the developments in technology, so it can be profitable invest in Petronas because of the business which it cover not only oil but more than that and spread across around the globe. Thank you guys for watching. I hope you guys have a great day. Goodbye.